Hey guys, and welcome to another episode of Monday Mortgage Madness, where I'm your host, Sean LaRue with Franklin Loan Center. I'm having a great day, and I hope you are too. Thanks for joining us. Today we're going to be talking about credit, inquiries, and opening up new lines of credit before you get the keys. That's before you get the keys. Based on my 12 years of experience and over $100 million funded in mortgages in the past 12 years, I'm going to give you all the tips and tricks to make sure that you do, in fact, get those keys. Alright, so we'll just get right into it. These are some of the top questions that I get, some of the top scenarios I see that will hinder your loan approval. And I get this time and time again. What's the difference between an inquiry? What's the difference between opening up a new line of credit? And we're just gonna break it all down for you. So we're just gonna hop right into it. One of the number one things that I see is people going out after they get pre-approved. They go and they get their contract. We're in escrow. We're all excited. We're starting to pack and do all these things. And then all of a sudden I get a phone call right before we're going to docs, and it's all about the inquiries on your credit report. So the most common thing that I see, and the biggest question I get is, hey Sean, you know, I can't have you run my credit because it's gonna lower my points. Look, running your credit for a mortgage inquiry or a pre-approval does not lower your credit score. What does lower your credit score is opening up multiple new lines of credit in a short period of time. The problem with that, and the reason why the credit bureaus lower your credit score, is because the credit companies don't know how responsible you're gonna be with said new credit. Are you gonna max it out? Do you really need it? Are you gonna balance transfer? What's going on? So lowering your FICO score is actually going to be a result of opening up new lines of credit over a short period of time. Usually the most common thing is a Macy's card or a Kohl's card, a Best Buy. Retail is very, very common for lowering your credit score, especially if you're trying to buy a house, get credit established, and all that jazz. So it's very, very important to know the difference between opening up a new line of credit and the difference of actually getting a mortgage inquiry. So back to our scenario when we're packing the boxes, getting everything ready to go. We're really excited about the move. We're scheduling the movers. We're getting everything lined up. Well, what happens when you're going to take a look at that new furniture and they've got a deal on the furniture? If you buy it now, you can get 20% off. You can finance it, 0% interest for 24, 36, 172 months. Not really, but they get you, right? You're excited about getting your furniture. You're excited about moving in, thinking about how everything is going to lay out, how everything is going to look perfect. But one thing you want to make sure is get those keys in hand before you're opening up new lines of credit, you're signing for a new car, or you're signing for a new credit card, or you're doing something for your brother's son, uncle, cousin. You know, try to stay away from the co-signing because that can affect you as well. One of the reasons why I'm recommending this is because they're doing the soft pulls now after your loan's approved and before you're getting the loan documents. And one of the biggest issues that can come up is the new inquiries. We have to prove that there's no new line of credit. We have to prove whatever that new balance or payment's gonna be. And like I said in some other videos, a payment of $50, $30, $25, you know, any small amount can actually negate your loan approval, change things, make it more difficult for you to qualify. So we definitely don't want to have that happen. You definitely don't want to have any changes, but do yourself a favor. Just wait until you have the keys in hand to schedule the movers, to get the furniture, to get the linens, to go by Bed Bath & Beyond, to do everything that you need to do to get your house set up. Because if you're preparing to fill the house, but have no house, what are we gonna do? So that's one of the biggest things that I can recommend to you on this Monday Mortgage Madness episode. I think it's a really good idea to make sure you get everything done, get the keys, but you gotta lock that house down first, and then you can move in. So the reason I'm telling you this now is because by the time we find out, it's possible that it's gonna be way too late for you. So this is really a video for all you real estate agents out there. Please share it with your clients, save this link, share it out to everybody, because this is a great way and a great resource to tell your clients what not to do to mess it up for them before they get their keys. Thank you so much for joining me. This is Sean LaRue with Franklin Loan Center. I'm so happy you're here. If you enjoyed the information, please subscribe. If you thought there's another good tip that you would recommend to everybody about running your credit or making sure that you're not going to mess your deal up at the last minute, man, we would love to hear from you. If you know somebody who might be going through this or might be going through this soon, give them a tag, share it to one of their socials. I'd love to hear from them. Happy to help. This is Sean LaRue with Franklin Loan Center. I hope you make it a great day. Remember, stay hungry and stay positive. I'll talk to you soon.